Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and in this video we're going to look at taking your trading to the next level. What it takes is a question I get asked lots. People have been learning strategies, they've been practicing them, and they've just kind of hit a sticking point. Maybe you're slightly unprofitable, maybe you're kind of around break even, maybe you're just a little bit profitable, but what does it take to move it to the next level? And this isn't always about just taking up more time. If you know my trading style, it's very much about efficiency, and I like to spend as little time in front of the charts as possible. I like to be out on the golf course doing other things, but we do need to put in some effort into very specific things, and these don't need to take up a lot of time. It can be 5, 10 minutes, 20 minutes, just kind of a day, a week, whatever you have to put in. Obviously, the more you put in, generally the more you're going to get out. So there are a few things that can help you take your trading to the next level. So let's look at these first few, and we'll classify it as documentation. When I first started day trading back in 2005, I was filling notebooks. Do I have one by me? Not right now. But I had these, just those, little scrapbooks you buy at the store with pages with lines on it, the 200-300 page ones. And I would just be filling those up. Like every day I would be writing down stuff, what was working, what wasn't working. So that it's documented. Then at the end of the week, at the end of the month, I could go through and I'd have a history, a document that said, I was trying this week. This worked really well for me. I tried this week. It was not working for me. And then also, if you ever get off track down the road, because it's going to happen, trading, can go like this, where we seem to have it and we're doing really good, and then we can lose it. Kind of like if you play a sport, like I play golf, and it's like your swing's amazing, and all of a sudden you go to sleep and you wake up the next day and it feels like it's gone. I like documenting that too. I'll write down when I'm working on my swing, what's working, what's not working, what isn't working. Try to, describe what I'm doing with my hands, where my body feels, where my hips feel like they are, all that sort of stuff. And the same thing with trading. I'll just whatever I'm working on, thinking about, I note that down. I'll also note mental states. If, let's say you come into the day and you're not feeling particularly well, maybe you have a bit of a flu, something like that, or you've just been having a bit of a rough streak, or you are trying something out, I like to note that, right? Because at the end of the month, you might think, I had a really bad month, but then you go through your daily notes and you see that, wow, this day you were sick. This day you couldn't trade because, for some reason. This day you were trying something out. So maybe, your results aren't going to be quite as good because you're just kind of learning something or trying something out. That's, it can take a lot of the kind of heat off ourselves, because at the end of the month we might just be upset with ourselves that we didn't do very well, but we can actually go back and see what we were working on. That can be really beneficial. So I like noting my mental states. If I was really kind of trading scared on a particular day, go back to what's working and what isn't. Same with for the strategies and also for the mental states. What did you try to do to calm that mental state that you're in? It could be that you were feeling really low. Did you try to bring yourself up? I like to trade in what I call a neutral state, where I'm not eager to trade, but I'm also not afraid to trade. And I like to find that equilibrium. And what I have to do to get into that state can change day by day, because the starting point changes. Some days I wake up and I'm feeling really great and we're gung-ho to trade, and I might need to bring myself down a little bit. Other days I wake up and I'm feeling more apprehensive. I'm feeling a little cautious. I don't feel confident going into the day. And in that case, I might need to come up with some ways to try to elevate my mental state to get me to neutral. So depending on where our starting point is, we want to maybe write that down, where our starting point is. Were we able to get to neutral? If we weren't, what was the outcome of that? Did we end up having a bad trading day because we were way too eager to trade and we just took a whole bunch of trades that we weren't supposed to? Or maybe we missed a whole bunch of trades we were supposed to take because we were feeling too low. Again, with our mental state, what's working, what's not, what kind of mental state seems to be an ideal spot for you? Maybe neutral is not quite how you would describe your ideal mental state for trading. That's how I describe it for me. But you might decide that you actually trade best when you're, a little bit elevated, a little bit feeling more confident. So think about that and note. Don't just write down what you're thinking about in terms of your strategies. Also note what kind of mental state you're in, what you tried to do to work on that. And then in terms of both of these, if there's issues, brainstorm. And I do this a ton. If I am over trading or under trading or my trading's not going well, I am brainstorming. I'm writing down ideas of how can I improve this? Because sure, you might be able to reach out to me via a quick email or something and say, hey, I'm struggling with this, Corey, what should I do? But really, if you can come up with your own idea, it's going to sink in a lot more than someone else trying to tell you what to do, because I don't know your exact mental state. You can try to describe your problem to me and I may be able to give some ideas of how to work on it. But the best breakthroughs are when you have your own realizations. And so I was constantly, and still am, anytime I kind of hit a roadblock, I am just brainstorming ideas. And this comes down to something, I call it cutting the apron strings, which is a lot of people who have taken my courses or things like that, they're so kind of preoccupied with doing what they think I want them to do that they've kind of lost their own inner compass. And they've lost their own confidence in themselves to come up with their own ideas because they think, oh, Corey's been doing this for 20 years. He knows what he's talking about. I've only been doing this, a year, and I don't know what I'm doing yet. But that isn't true because I got to profitability quite quickly by trusting my own, let's call it our inner compass, and by doing this brainstorming and saying, like, what's a good way of doing this? I'm struggling with this. How can I get over this? And someone else, a different trader may not agree with you, but if you feel that is best for you, you got to cut that apron string. And ultimately, when we trade, we want one voice in our head. And that is the voice we've decided on how we want to trade. It is us. It should not be me. It should not be another trader. It should not be the traders in your chat room telling you what to do. It has to be you. And we get that confidence and we get that clear inner voice when we brainstorm, come up with strategies for how we can overcome issues, how we can improve our strategies, how we can improve our performance. And again, these don't have to take up a ton of time. It's, kind of just while you're trading, you can, or just before, just after, what's working, what isn't, noting our mental states, brainstorming some of these ideas, and then, really thinking them through, and then taking that into the next day. And then the next day, of course, as you start your day, you would be thinking about what you've just discussed, what you've learned, what you've reviewed, and this then starts our, how are we going to prepare for the next day? How are we going to be better tomorrow than we were today? And this comes down to post-trade review. Pre and post-trade review also includes mental states. It does not just include how you hit a buy and sell button. because maybe you hit the buy button at the right point, but you exited that trade early because you were scared. That is not a strategy issue, that is a mental issue. So when we go into our days, we want to be writing down, are we having mental issues, or are we having trading issues? And as I said, we write this stuff down, so we document it, and then we can work on it, we can brainstorm how to improve. Then in our pre-trade and post-trade review, we can look at why trades were taken, potential market or mental issues, as we just discussed. A big one is, especially for swing trading type things, we'll discuss day trading after this, but for swing trading, you have time to kind of analyze that trade. Those trades will often be open for at least hours, but often days, sometimes even weeks. So what's your plan of attack? Really think it through. Think through scenarios of, you think this stock is going to go up. What are you going to do if it doesn't? What are you going to do if it goes sideways for a few days? What are you going to do if it drops immediately? What are you going to do if it shoots up immediately? Think about those scenarios. So this gets you thinking like a chess player, multiple moves ahead, where you're prepared no matter what happens. I've said this before. I don't care what the market does. What I care about is that I know what I'm going to do no matter what the market does. And that is a big leap from being like an okay trader to being a really good trader, is what you will do no matter what the market does. Because at that point, it almost doesn't matter what the market does. It's, if I take a trade and I am expecting it to go up and it doesn't, I know what I'm going to do in that situation. And there's no right or wrong answer. Some people might say, oh, you should cut that trade right away. Or others say, well, hang on to it because it hasn't gone against you. There's no right or wrong. It is what you decide. Remember, cutting the apron strings, brainstorming how to improve on these trades. Look at your own trades and see how you could do better in these situations. If, the price isn't moving quite as quickly as you think after your entries, brainstorm. Should you just hold it? That's one option. You could also look at maybe your entries are a little bit early. You could brainstorm how to improve the entries a little bit so your timing's a little bit better on those. So there is no right answer. It's multifaceted. You can brainstorm how you want to improve your trades in a way that works for you. So come up with that plan of attack. Especially for swing trading, you can plan out that trade, what you're going to do, and what would change it. So you have this idea of, okay, what I'm going to do if the price shoots up, what I'm going to do if it moves sideways, what I'm going to do if it starts dropping immediately. That would also include, where we're putting our stop losses, where we're putting our targets. If we're going to use a trailing stop loss, we can plan that all out before the trade, so that once that trade gets going, we won't. It doesn't make it super easy to follow that plan we've laid out, but at least we have that plan, and especially if we've written it down, then we have that document we can go back to and say, yeah, this is how I said I would handle this situation. I'm going to handle it this way. And what would change it? So an example of that would be like you have this plan for this trade. It hasn't quite hit the target and earnings is coming out. I don't like holding through earnings. I have strategies for taking trades right after earnings, but I don't like holding a swing trade through earnings just because it can be pretty random on whether it shoots up, shoots down, and I don't like that potential risk. So that would be an example where the situation changes. It's like, I'm going to do this, this, or this, depending on whether the price does X, Y, or Z. Or I will just get out if the price hasn't hit my stop loss or target by the time earnings come out. So a plan of attack, what would change that? Another example that comes up often is we had a target in mind, and we were kind of thinking that maybe it's like 30% above our entry point for a swing trade. But the price shoots up 20% in a day. And we were kind of expecting that maybe we'd make 30% over the next month. But we're up 20% in a day. go back to brainstorm. When these types of situations happen, do we want to just take that profit because it's like the market just gifted us 20%? Or do we let that original plan play out? And again, there's no right or wrong here. It is, what can you mentally handle? Think about that as well, because if you want to take your trading to the next level, you have to trade congruent with who you are and keep yourself in a good mental state. A lot of times this situation will arise and they're going back and forth. Well, maybe I should hold it, maybe I shouldn't. And I like to think, like, what can you live with and what can you live without? If you take that 20%, are you going to be pretty happy? Yes or no? If now, over the next few days, what if it goes up to the 30% that you were originally going for? Will you still be happy with the 20%? Or would the fact that it went up kind of devastate you? What about if the price drops? So you didn't take the 20% and then it drops all the way back to your entry point. What do you do? Would that annihilate your mental state? We want to avoid anything that annihilates our mental state. So for some people, getting out at the 20% profit and missing out on that next 10 is more than they can bear. For other people, the price dropping and them having not taken that quick profit would really mess with their head. And maybe both of them could mess with your head. So in that case, maybe just take your 20%. So that goes back to this brainstorming and also what would change. So you have this plan of attack, but we can also think about kind of alternative scenarios. And this is why trading takes time, because it takes time to have a whole bunch of trades where all these scenarios can happen. And the kind of more scenarios we're exposed to, the more we can fill in the holes in our trading plan and kind of come up with solutions for these things. So yeah, if we get that one that really shoots in our favor really quickly, we can then develop a protocol for how we're going to handle that situation. And maybe you haven't had that situation yet, so you haven't really had to think about it, and that's fine. But those types of situations will arise, and anytime something kind of weird comes up, documentation becomes important. What are we going to do? How are we going to handle it? Think about your mental state. What's going to keep you in a good state of mind to continue trading well? We want to avoid those situations where, we're just really frustrated about something. So I like to work that into how I trade. Then we also want to consider, after the trades, we can look at how did it go? Did I follow my plan? And this is something called efficiency. If you came up with a plan and you had stuck to it and you would have made 30%, but instead you kind of deviated a little bit and you ended up with a 10% profit, you have, kind of 33% efficiency. You got only about a third of the gain you were looking for. And that may be okay if you had come up with some rules for how that plan of attack would change. Because let's say you did come up with a scenario where, if I'm up close to my target and it falls back, maybe it happened really quickly, I'm just going to get out. So in that case, your rules actually said, if it falls back to that 10% profit, get out. That would be 100% efficient trade because you did actually follow your scenario that you had planned out. So it's not just, don't look at your max profit potential and where you were. Look at how you planned out that trade, taking into account everything we've talked about, and then decide kind of where was a good exit point based on the plan of attack that you'd laid out, including what could possibly change, and then where did you end up getting out. And if it's pretty close, then that's 100% efficiency. And if it's way off, that means you deviated from the plan, and then we want to go back to documenting. Where was our problem? What wasn't working? Where was our mental state at? Was it a mental issue? Was it a strategy issue, what went wrong, and then brainstorm again. So this is just kind of a continual process where we're doing our our pre-trade to help us plan out trades, our post-trade where we're looking at trades in hindsight, how we handled them, and then it goes back to documentation again. What's working, what isn't, how can we do better? In terms of day trading, our pre and post-trade routine, I like to, before the day starts, I'm really reiterating. We're not going to have a lot of time, especially like I trade a 1 minute chart, so it's like, trades can happen super fast. I'm not going to have a lot of time to like really plan out my trades in the moment before. So that's going to have to happen before the day begins. I mentally prep by mentally going through some trades, rehearsing in my mind that this is the pattern I'm trading today. I have one called a TC, an RB, and RT. So those are the ones that I'm going through, and I'm thinking these are the trades I'm most likely going to see. I really like to see strong movement. If the movement's a little weak as the day starts, then I'm more likely to use a trailing stop loss. If it's really low movement, then I'm not going to trade. So I'm going through, before the day starts, a whole bunch of things, just reminding myself of these things. And then during the day, I'm doing some documentation as well. You'll see, if you've ever seen my charts published on Twitter, or X now, I guess, you'll see notes on there where I just note like low volatility, I don't like this for some reason, I'm feeling anxious, I'll note my mental states. And when you're first starting out, there might be a lot of documentation on your charts. And that sometimes may even mean missing a trade because you're writing something down. That's okay, right? Get in the process of the documentation and doing this pre-trade thing where we're priming our mind, reminding ourselves of these things, writing things down before the day starts, what we need to be reminded of, what we've been struggling with, what's been working, what hasn't been working, how we're going to take that into the day. And this is all part of processes. We want to develop processes for everything so that when you start the day, you know what you're getting yourself into. You know what your problems have been. You have ideas on how to fix them. You are noting what has been an issue, your plan of attack for swing trades, going into trades. So it's everything. It's our mental states. It's our trades. We develop this sort of routine so that every time that chart platform opens, or we open our brokerage platform, we have a set of steps which guide us through making sure we're doing this. And the processes, they don't have to be super elaborate. If you just did this, your pre and post trade, tying it in with the documentation, you are going to be miles ahead of most other people. And like we said, the more effort you put into this, the better off you're going to be. But there's no point saying, I'm going to spend 20 minutes on this tonight, when maybe it only has to take 5. Whereas if something's really going on, maybe you might have to sit there for an hour and kind of really think things through and figure things out and what's the best way to handle different types of situations. And when you're starting out, thinking of some scenarios that could come up. I think the main ones are, what do you do if a trade kind of flatlines after you get in? What do you do if it goes up? What do you do if it goes down? And then you could also think about velocity. What happens if it drops really quickly, or what happens if it spikes really quickly? So that's about 5 scenarios that we can kind of think through how we would handle those situations. That is a process. And for day trading, I'm kind of doing it for the whole day. If it's quiet, I'm more likely to use a trailing stop loss. And maybe I have some time to think that trade through before, but sometimes it happens really quick and you kind of have these blanket rules that you can apply. So I would say that's it. Like looking back to, 2005 when I started, these were the really big things that I think made a difference, because when I started out, it was I was just kind of hitting keys like a lot of people are, and it was only till I like really dug in and wasn't really listening to a whole lot of other people. It was just I was looking at what I was doing, I was writing down what was working, what wasn't, and then just brainstorming. How am I going to get better at this? How am I going to do what I am doing better? How am I going to get rid of this mistake? How this mental issue seems to be nagging at me. How am I going to improve on that? And that really helped me out, and then it ties into your actual pre and post trade routine. So if you can do that, I think you will take your trading to the next level. Doesn't have to take up a ton of time. Be efficient with it, and yeah, start writing stuff down. Buy a stack of those little notebooks, and I was going through like one of those big ones like pretty much every couple months, the 300 pagers or whatever. Maybe not quite that much. Maybe it took about 6 months or so to get through one, but like a little page of notes each day. And how detailed you want to get, up to you. You can document every single trade in there. This would be kind of separate from looking at, you'd also ideally take some screenshots. This is more just, the stuff that usually isn't included when you just look at a trade in hindsight, or you look at an Excel spreadsheet with all your trades in it, or you download your trade log from your broker. That shows all the numbers, but we want to dig deeper and do this sort of stuff. Because this is all the context of what was going on between our own ears, what we were seeing, what we were feeling as those trades were developing. And that's the really important stuff, because ultimately it's about controlling that, working with what you're actually doing, and finding better ways of doing it. So there's loads of resources on TradeThatSwing.com if you want to check out more, especially on the trading improvement section. There's in the menu, if you go to the menu, there's a trading improvement section, and you'll find lots of articles on topics kind of like this that can help you out, and especially if you're having some kind of psychological issues, like you're nervous to trade, or you're overeager, or you're taking lots of random trades. There's lots of resources on that. Until next time, happy trading.